In today's business world, change is the only constant, and mastering transformation is the ultimate key to success. Welcome to Shift and Thrive. I'm your host, Natalie Nathanson. Each week, we'll bring you conversations with CEOs who delve into how they successfully drove critical change in their organization. This show is sponsored by Magnitude Consulting, bringing you the thinking power of a growth consultancy and the getting it done power of a full-service B2B marketing agency. Welcome to our first official episode of the Investor Spotlight series on Shift and Thrive. While we've had some great conversations with investors on the show before, after getting repeated requests from listeners for more, we're leaning in more intentionally, now with a dedicated series to explore what investors are really thinking. And in a capital environment that's evolving fast, it's never been more valuable to understand how value gets built and what separates companies that scale from those that stall. This series is intended to give you a direct line into that perspective through candid conversations with successful investors who are backing the next generation of market leaders. And with that, I am so excited to introduce today's guest. She's an accomplished early-stage investor with a diverse background whose perspective is shaped by global experience and a track record of backing companies that have become category leaders and achieved standout exits. She's part of a globally focused early-stage venture capital firm that helps founders across the US, Europe, and Israel to build, scale, and expand into new markets, often with a strong emphasis on US entry and expansion. The firm's investments span sectors including cybersecurity, fintech, digital health, and enterprise software. She is a principal at Flint Capital. Elena Gantvarg, welcome to the show.
Thank you. Thank you, Natalie, for having me.
I am very glad to have you on the show, and I always love to start with a story about transformation. And to be honest, more of the ones that I've heard, both on the podcast and with my own CEO and founder network, are more from the CEO's perspective. And so I'd love to hear one from your purview as an investor. I'm curious, are there any big stories that stand out about a real transformation that you witnessed in a venture?
Oh, yeah, absolutely. I mean, we witness it every day, also with our portfolio companies. And if you're asking about like what was the main, driver, trigger, what kind of transformation happened that took the company to the next stage, very often it's more than one thing, one change. I remember we have a company in our portfolio. We led Series A there back in 2016, I believe, and the company was struggling. And when they were raising their next round, we kind of were not entirely sure whether we want to continue participating in this journey. Luckily, we decided that we will continue investing in the company, and today the company is valued at I think about $4.5 billion. And so they totally made the shift from a struggling company to this kind of company. And what led to it, it would be wrong to say that one thing led to this. It's it's a change of management. It's it's a pivot, some strategic acquisitions. It's I don't know, aggressive, I would say aggressive expansion into high volume sectors, and of course some luck.
Yep. There's always a little bit of luck involved, but much more skill than anything else, for sure.
Totally.
I'm curious to hear, what was the relationship like, when you did make that decision to invest in them again and kind of through all of these changes? What was the relationship like between you and your firm and kind of the founder or leadership team on the other end?
It was a good working relationship. It was just a little bit, we were trying to understand when we were making this decision, we were trying to understand what is the potential there and whether the main challenges that they were facing at that time, whether they are resolvable. And yeah, so.
Yeah. And you mentioned this started a while back, but do you remember what was the first lever that was pulled that really started them on this kind of new trajectory?
Um, I think it was like change of management, honestly, because very often what we see is that a CEO that starts a company and takes it off the ground and takes it to the next level, from zero to Series B. It's not always the same person that can take the company from that Series B to being a unicorn. So sometimes, a change of a change of people is important.
Hmm.
Yeah,
Yeah, and I know it can be hard at times for the founder to let go, whether it's sometimes by choice and sometimes not. But I also know that sometimes the founder like really feels it themselves and they make that recommendation.
exactly. It is occasionally it is very painful, but then very often it's not as painful because the founders do realize their limits, and very often they're not even interested in participating in this kind of scale, game. They just want back and start something new again, like I'm taking another company off the ground. So uh it's not always bad.
Right, for sure.
Yeah.
I want to shift gears a bit and talk about how you evaluate companies at this early stage. And I know you're focused primarily on seed through Series A. Can you talk about like what you're really looking for from a founder or organization at this stage?
So our sweet spot is seed. Seed rounds are not where they used to be about 10 years ago. So, no, 10 years ago, we would call it Series A, I think. So, for seed rounds, we do want to see product market fit and some initial traction. And we don't have hard requirements towards like the revenues or the number of customers, but we want to see some ability of the founders to sell, and some interest from the buyers.
Hmm.
For pre-seed, like it's all about the team, because they hardly have anything. The idea is very often like worse. Basically, not like I feel bad saying nothing, but let's say not much. It's not worth much. So it's more about the execution, and if we believe that the founders they're the right people to execute this, this is what will be the most important. And Series A is basically all about the numbers.
I'm curious on the seed round. What kind of expectations are there around kind of the timing to scale? And I'm sure there are some differences by organization, but any kind of generalizations you can share?
These days the expectations are very high. Like I recently talked to one investor from California. They had very hard numbers. They wanted to see a company being able to scale to 1 million in revenues within a year and to 5 million in revenues within 2 years. So we don't have like this kind of requirements. Uh, but the thing is, like we see many companies that were able to grow exponentially and scale their revenues to a few million within 5 months, 6 months with 2 or 3 people. And we as investors, we can invest our like 1 million only once. So every investor is basically looking for the company that is capable of scaling exponentially. And another thing is that these days, I believe that it's very, very difficult to build any sustainable competitive mode with technology. Uh, it wasn't like that given like 3 to 5 years ago. But today it's this whole game is becoming about like who's running faster.
Yeah. No, that I see that too. I think just so much changing in kind of the process of like how software is built, how it's sold, really like across the board. Um, the piece around the competitive moat shifting, I think, is a very interesting
Yes.
one. Can you talk a little bit more about that?
Yeah, absolutely. So first of all, like I still want to hear from the companies, like what do they actually think about their sustainable competitive mode. So I always ask this question, realizing that there is no good answer. So I just want to hear their thoughts. And but of that, having said that, go to market becomes very important. Uh, how uh, how do they plan to execute? How do they plan to scale? Do they understand like their space and the ways to scale in that space, that industry, and etc. For example, like if we talk about the shifts, like in go-to-market strategy, which is very important today, it's always been important, but it's changing. Like a few years ago, I would say a startup would choose a go-to-market strategy, and whether it's product led or sales led or marketing led, they would justify it, they would defend it, and I can go with it. I think that what has changed the most during the last few years is that the buyers, they don't want to be sold to. They want to touch the product, realize the value instantly. By instantly, we're talking about minutes, maybe hours, like less desirable. But if we're talking about weeks, just forget it. You know. So it's what we're like. It's PLG, product led growth. That is not new. But we used to talk about it as a go-to-market strategy. These days, it's not even go-to-market strategy. It's an absolute requirement. It's a requirement. It helps to open the door for you, but it's not sufficient. Because after the buyers are not the users of the product. So after somebody played with the product, liked the product, saw the value, then sales should come in and address all the remaining issues, including compliance, like risk mitigation, etc., etc. So if you do it the other way around, like sales first and then product value later, this is not going to work today, right? Yeah. So this is what I see as a main shift during the last few years.
Hmm. Yeah, I think it's a big one. And I know a lot of organizations are still trying to wrap their arms around it. And I think part of it is driven by, like you said, the changes in what the users expect or what they need, or, it's so hard to know who to trust because it's easy for a company to kind of look polished and credible and professional and not always have kind of the, the the credibility behind the scenes. Um, you know,
Yes, and I just wanted to add that like it's yes, we talk about the PLG, immediate value, etc. However, it's very difficult to talk about like the right go-to-market unrelated to specific like industries and sectors. For example, like I look a lot at health tech and digital health, and PLG for health tech, it's cute, you know. It just because there is when it comes to like let's say selling to hospitals, there is no self-serve. It just works differently. You still have to build credibility. You still have to run the pilots, and only then, like at some point, you will move to contract. PLG doesn't do much there. It's at most it could replace this like demo stage, Yeah.
Yeah. It definitely comes more naturally, or is more natural for some types of companies than others. The
Yes.
interesting thing is, I think this shift is even bigger than that. I'm going to be speaking next week on a webinar for kind of selling into the federal government, and the Department of War has completely like re-architected their expectations, and they're really driving the tech vendors to do just what you said. And so it's happening right in both government and commercial, but to that point, easier in some cases than others.
Yeah, sure. Absolutely.
Hey, this is Natalie, your Shift and Thrive host. After chatting with lots of CEOs, one thing is crystal clear. Leveling up your company means having a killer go-to-market strategy. That's what my crew at Magnitude Consulting does every day. If you're trying to step up your marketing game, whether it's strategizing, accelerating your pipeline, expanding into new markets, or getting into AI and automation, let's talk. No pitch, no pressure, just good conversation. Visit shiftandthrivepodcast.com/Natalie to schedule a time. Can't wait to connect. I'm curious. I know I want to talk a little bit more about go-to-market, and I know there are a lot of differences depending on different organizations and industry sectors and all of that. But curious if you think there are any like common traits or decisions that you see successful startups making when it comes to like how they think about their go-to-market and like where to focus at those early stages.
It's hard to tell. I think that hard to tell. I think that the founders that are thinking like forward, they just start thinking about their go to market very early on. Uh, Again, as an example on digital health and health tech, like many startups that are selling to the hospitals, they may go out of business before they sign their first contract. Right, the sales cycles are very lengthy, and with other enterprises as well. So there is no right answer here, but some companies start with like smaller clinics, just to be able to generate some revenues while selling to trying to push the product to the hospital systems like at the same time. But you need to think about it, because if your product is new and you're trying to push it, some companies are thinking of building a product with design partners, like works really great, right? Because you have early adopters, somebody to test the product and to contribute like what they want to see, what is important, what is less important, etc. That's great. But if you sit at home and build a product that you think somebody's gonna need, and then you try to push it to the hospital system, and then it's gonna take like 2 years, that's probably not something that will end well.
Yeah. I think one of the things I'm seeing in kind of the founder behaviors in particular is an openness to pivot, but at the same time not being too quick to kind of lose patience and change course. And I think some startups flounder in that kind of middle zone.
Well, of course, you can pivot anytime, but not because the grass is greener elsewhere. You really need to understand why you're pivoting and what can you do better after you pivot. Yeah, so it is difficult, it's difficult to find the right moment to pivot. So you have to realize the challenges you're facing. You have to understand whether you can do anything about them now or in a month, or whether you can resolve them at all, and or maybe the market has changed. Like the market changes these days very quickly, and maybe you realize that like the product you have built, it doesn't have the value that you hoped it would. So definitely pivoting is okay. It's just at the right time for the right reasons.
Right. I'm curious to ask you, what do you see as the role that investors should play in guiding those early go-to-market decisions, either kind of in general or your firm's philosophy on it?
My firm, like we're at Flint, we like to be hands-on. We like to help our companies with whatever they need help with. Having said that, like we don't like to uh, um, kind of to push, like our we can share our thoughts and we have experience, and we like the founders that will listen to us and not necessarily do what we would tell them to do, right? Because very often they would have to deal with many investors, and very often the investors don't agree. Like, so it's like, what should the founder do? So they should think for themselves, of course, but listening is important because after all, we do have many companies in our portfolio. Like we work with the companies and we have some experience. But we prefer the companies to communicate to us what is it that they're struggling with. We can help with anything. We can help with thinking about the strategies. We can help with pitch deck. We can help with introductions to investors and potential customers. We can help with hiring the right people at the right time. For example, we invest a lot in Israeli companies, and it's a small country, so they have R&D there, but then they expand either to Europe or to the US, and more often to the US. So if they build a presence here, we can help with that too. So we can help with many things, but we always ask our companies to come to us and communicate, like what is it that they need help with.
I want to ask a bit more about the market entry for the U.S. because that's a place that my firm works with a lot of organizations as well, and I've seen some very successful entries and some maybe kind of a bit trickier, or some starts and stops for them that they'd experienced. So I'm curious, like, what guidance do you give around that readiness for entering the U.S. market? Like, what should a company have in place? What should they be prepared to put in place to be successful?
So before we invest in a company that is planning to move to the US, we always want to see a little bit of traction in the US. And the reason for that is that we had our stories that were not very successful. For example, like a couple of times we invested in companies overseas that were able of building, because they were very successful overseas in their local markets, but then they moved to the US and they were completely unable to replicate their success in the US. And it's not even very often. It's not about the advice we can give. Very often, it's just cultural, issues that prevent the companies from growth. To give you an example, I once was asked to talk to Australian cybersecurity companies that were selected by the government, and they wanted to expand to the US market. And as I was talking to one company, they were doing great, like founded maybe like a year before that, or 1.5 years, generated a couple of million in revenues. And so they were raising around and expanding to the US. And I asked them, like, how much are you raising? And they said, like, probably like, 750K, maybe 1 million. And I asked him, like, why? Because obviously they were doing great. They already generated a couple of million in revenues. And they said, like, oh, we need more, like, the thing is that they were not hungry for this exponential growth. It was just a very different set of mind. like in the US, we expect, like the companies to raise and to scale, or to scale without raising, but the speed is very different. And in many European countries and Australia as well, like people are totally fine with taking it slow. It's not like very often this like the factors that are outside of our control or their control. It's just like cultural things. um but some countries like Israel, the mentality works well, like many startups are very successful. They're great technology. They also like to scale quickly, so there is a good like it's compatible with the US. And the reason why we decided that we want to see some traction in the US from the companies is to see that actually the companies know like know how to scale, how to sell and scale in the US. It's very important because things in their own country can look very different.
Yeah, it's so interesting to hear this perspective from you, and I think it validates a lot of what I've seen. And I think in my firm's work, like we've learned over the years where we can be successful with companies entering the U.S. market and where we struggle, and try to only kind of enter new engagements where we believe we can be very successful. And I found, having a salesperson in the U.S., so someone in person who can go to events and learn the market, whether that's someone coming from another country, it can be fractional salesperson, all of that is a big one.
Absolutely, very important. We're also like saying to our company that you have to find like a salesperson here that knows the market, that knows the industry, etc. But I think that's step number one is that the founders have to realize first that things work differently over there. If they realize that they can work with it, like if they go to a different country with an expectation that everything is going to work exactly the same way as in their like local country and markets, this is when things may go wrong.
Yes, for sure. And I can say from a marketing standpoint, kind of that understanding of the US market and what it's going to take, like the messaging varies quite significantly across different cultures, like how bold and kind of in your face does the messaging need to be. In the US tends to be kind of on the higher end of that compared to some other parts of the world. The demand gen tactics, how sophisticated and kind of perfectly optimized you have to be as you're executing the different tactics, because it's such a competitive market. So I think a lot of these kinds of things are, to your point, like the nuances that a founder needs to understand what it's going to take to be successful, and then
Yeah.
make sure they have the stomach for it.
Yeah, absolutely, and you're right about that because the competition very often is looks very different than in their own country. So I talked to some companies in let's say cybersecurity in the Netherlands, like small country, like there are good companies, but the competition is they can win deals so much easier, and then they raise the money for expanding to the US. And then I ask them the question, so who will you be competing against in the US? Like very often they don't know because like the situation in their home market is very different.
Yes. I want to talk a little bit about resourcing, and we're talking now about what do you need to have in place, as well as what you shared earlier, just around the smaller teams doing more. So I think with changes to team sizes and startup expectations and economics and all these themes that we're talking about, there is a lot changing. So would love to hear from your perspective, like how do you advise founders to think about hiring in general, hiring in-house versus other models? What do you see in the current landscape there?
It's I can't give you like one answer, like I advise this or advise that, because it all depends on what the company is building and their needs. Uh, uh, Many of our companies have teams overseas, like programmers, etc. Not in the US because it isn't expensive, right? So if they can have some of their people overseas, great. Like, especially if they know the culture, and yeah, why not? Um, Whether you have to outsource the whole product, like, to the third parties, like, I don't think so. Like, otherwise, what is your what is your mold, and how much ownership of a product do you have? But we do see that the companies, like, where they have like 5 people in their marketing department, they can now have 1 person or 2 people and AI. And generally, like, based on what I see with other companies, AI can do many things now. Like, I think at some point I will be replaceable too.
Yeah, a lot changing in a number of different functions.
Yes, like, totally. Yes. It's my eldest son. He studies like robotics, computer science. They don't write code from scratch. Because of that, of course, the expectation of the companies to build faster and scale faster. That these are the expectations that we already discussed previously, but right, because you can do a lot more work with fewer people. So
Yeah.
you should hire only those people who are absolutely essential. Like, do you need a marketing person? Probably. Do you need 5 of them? Probably not.
Right. And to your point, making sure that it is an AI forward person, and that knows enough about all the different facets of marketing to be dangerous. I mean, when we work
Yeah.
with startups, sometimes we are kind of the outsourced marketing department, and we've started talking about this kind of dynamic duo combo of, like, you need the strategist and then you need the doer, and both of them need to be AI enabled and have processes and frameworks for working effectively. I'm curious, when you're seeing on the marketing side specifically, like when you're seeing these smaller teams, what's kind of the profile or the roles that are kept?
In startups,
Yeah.
it really depends on the stage, because obviously startups don't hire many marketing people, like, when they're pre-seed.
Yeah. I was like, maybe a bit later when they would have otherwise grown
Yeah,
a small team.
I think that a couple of people, like, one person who oversees the strategy and one person who can work with AI tools, like, something like that. That makes sense. Depending, of course, of this, like, size organization and what they're doing, but generally, I see that many people have these days, like, a couple of people in their marketing teams.
Hmm.
Yeah.
I'm curious, pure curiosity, but you mentioned your son is studying robotics. What was the thinking like? 'Cause I've talked to a lot of folks with kids in high school, college, like entering the workforce. Um, what were the conversations to think about, like, what is a good career based on all of the unknowns in the world ahead?
I never have this kind of conversations with my children, because I don't even want to take this kind of responsibility in this, like, constantly changing environment and world. Uh, uh, to 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 give you an example, like, I grew up in Soviet Union, and when I wanted to, uh, when I was thinking of, like, what should I study, my father, he wanted me to study foreign languages, because he saw that that was the only way for me to travel the world as an interpreter, because the country was closed and nobody was allowed to go abroad. And look how much has changed since then. Then people were sending their kids to study computer science, because they would said, what they would say, like, if you study computer science, you are set for life. Then the same was finance, like before the next crisis. So how can I even give an advice to my kids what to study and what not to study? Like it's the only thing I can say is like follow your heart and do your best. I believe that everybody who has a passion, I think that those kids who found their passion in life, they're very lucky, because there will always be a place for people who are very passionate about what they do. But if you're very much into music and your parents are telling you, look, it's going to be very difficult to make a living with music, so why don't you study computer science? I think this is a very wrong message. And fortunately, in the US, kids can change their majors, like if they like start studying something they don't like it, they change it and they study something else. Generally, they graduate from one thing and then they work in something else. And this is like what I really like about the universities and general like acceptance, that like you don't need to study I don't know, business and management in order to work in venture capital, for example. Like, we had one colleague, she started law, she had a law degree, and she has like she's a partner of a venture capital fund now. So the sky's the limit. I think that if the kids just do what they want, do what they feel passionate about, uh, they will find their way.
Yeah, I think that's a really nice message. And I think, it would be great if all of us had a crystal ball. But I think you're right that, passion does go a long way. And kind of the value of like interdisciplinary studies, or taking like the example of your colleague with the, law career, kind of moving into investing. Like it just gives you a different perspective that can be really powerful too.
Yes, and also like I think that it's important to communicate to the kids that they're capable of changing the careers, like if necessary, because especially with this AI development, I think nobody knows what jobs will be safe like 5 years from today, and which jobs are gonna die slowly.
Yeah, that's such an interesting topic, and I could keep talking about this, but I also want to kind of talk a little bit more about Flint Capital and ask you a bit about the best way to engage with your firm. You talked about with your portfolio companies being kind of as hands-on as they are looking for that support. But
Yes.
for founders that are evaluating potential investors, I know it can be hard to kind of figure out what's the best fit. So can you talk a little bit about kind of what you recommend for that process?
So the majority of VCs will tell you that they really hate cold outreach. Like some cold emails, mass emails. Well, I'm not an exception. I can say that I like it. Uh, uh, I, like I'm more willing uh, to take a look at somebody who is reaching out of nowhere, but has a good story to tell. I think I'm more willing to do that because, like, I moved to this country and I didn't know anybody. I didn't know a single person. Like, you have to start somewhere. It doesn't mean that I will be reviewing all these cold emails, but if you have a good story to tell, just remember that we all have ADHD. Like we spent like literally 30 seconds on reviewing your email. So don't make it long. I once received a pitch deck of 100 pages. I kid you not.
Wow.
Yes. So tell a good story. Do your homework. Like if you're emailing me and you're looking for an investment in I don't know, like crypto space or hardware, something we don't do. We have our own profile. You can go on our website. Generally, don't waste your time on approaching every VC that you can find. So do your homework, and if you think that we're a good fit, just shoot an email, and a short one, You can reach me at eg@flintcap.com with my email address. You can just all find me on LinkedIn. Send me a message, a short one. Like I can stress,
Short and a good
like
story.
short. I'll say it a few more times, like a short one. And, like I don't, I never did this math. Like I never tried to calculate how many cold messages am I getting every day on LinkedIn and my email. And sometimes I feel bad because I can't possibly respond to all of them. I cannot. I can't even respond to half of them. So try to get like whether you are reaching out to us or to somebody else, try to be short and but to the point, and so that like once we read your message, we will feel like continuous conversation.
Yeah, thank you for sharing that. And I know we don't have too much time left, but a couple more questions for you. One is, we're talking about your firm. I'd love to hear, your story. How did you get into investing?
I know that many people dream about getting into VC, like world and investing. My story is very different and not a sexy one. So I worked for big corporations for many years in different countries, and at some point I relocated to the US and didn't work for a few years because I didn't have my working permit. Once it was arranged and I started looking for employment, I had a gap in my resume. Like this is a very standard, true but not sexy story. And I was a foreigner, so many people didn't understand my background. But fortunately, like I was introduced to Sergey Gribov, our partner at Flint. Flint was very new at that time, and they were looking for some help, somebody who would help to do some due diligence, analyze the companies. I worked for many years in management consulting before that, and the skill set is obviously not the same, but very similar because both with management consulting and like due diligence for many startup companies, you need to have the ability to get to know with new technologies and markets within a very short period of time. So I was hired at the time, and I think as of today, Flint has been the employer that I worked. Like it's the longest I have ever worked for one company. So even so, I was totally unfamiliar with this world. I love it. I love working with startups. I love evaluating the new technologies. I love communicating with people who are dreaming of changing the world. And every day looks very different from today. Today is not the same as yesterday. Tomorrow is gonna be very different too. And I love my job.
Yeah. Well, I love hearing that. And I think I share that enthusiasm for working with startups. There's such a great energy in
Absolutely.
working with those companies and such a big impact that you can have. And I think you just did a great job too, bringing this full circle from what we were talking about earlier of right being able to take our career kind of skills and expertise and applying it in new places. So
Exactly. Yeah.
yeah. I want to ask you one closing question and maybe a bit more introspective, but what would you say is the best piece of advice that you've been given in your career that's really stuck with you?
Let me share maybe a little bit more like a personal story. I'm not sure that's as much about my career, but when I worked in the Netherlands, I worked for KPN Research at the time. KPN is a major telco provider in the Netherlands. And I had a great colleague, Wim Baumer, and unfortunately, he was diagnosed with cancer. And I remember visiting him literally a few days before he died. And when we met, what is it that you can talk about when you know that the person is going to die like very soon? But he made that very easy for me. So he was asking about the company, he was asking about the work, he was asking what I like, what I'm doing, and I said to him, like, yes, I like the work, but like, I hate the way I do things. I just hate it because I'm a last minute person and I postpone everything. And, sometimes I work at night just because I didn't start the project on time. Uh, so as I was saying this, he asked me, he said like, okay, so you immigrated to the Netherlands and you studied here, you did your master's degree here, like the grades were good, right? Right. And now you're working for a good company, and everybody's happy with the work you're doing, right? Right. And so the reports you're writing, like they're delivered on time, like no delays, right? And he said, so why are you still like fighting yourself? Like why do you make it so difficult? And why don't you just accept your ways? And you can always improve them, but why don't you just accept it? I cannot say that I've become a way more forgiving to myself these days, but it stuck with me. Like when if you get things done, just at least be and it's more than just a career advice. Like it can help you with your career, it can help you outside of your career. Just embrace your ways. You can always try to improve and don't fight yourself. Don't make it more difficult for yourself.
Yeah, I love that advice. It gave me goosebumps as you were talking because I think it's such a powerful message and what a gift to get from a friend and colleague, especially knowing what he was going through. So
yeah,
thank you for sharing that. As we wrap up today's conversation, I know you did share your contact information earlier, but if people want to get in touch with you or Flint Capital, can you share the best way to do that again?
Absolutely. So my email address is eg@flintcap.com. My name is Elena Gantvarg. You can find me on LinkedIn, and you can send me a message there. And of course, we have a website, flintcap.com. And you can find all the information about us there as well.
Wonderful. Wonderful. Well, thank you so much. I really loved hearing so much of what you shared and what we talked about today, talking about what strong go-to-market looks like in today's environment and some of the differences in different sectors and some of those shifts in expectations on a startup venture. So many valuable insights here, I think, for any leader navigating growth in today's climate.
Thank you so much, Natalie. I enjoyed the conversation, and thank you so much for having me here today.
Completely my pleasure. So thank you. And thank you too to everyone that's listening. If today's conversation sparked something for you, and I am sure that it did, please pass this along to another founder or CEO in your network. We know that these are the kinds of conversations that really help us scale smarter, build stronger, and create more resilient ventures and leadership for ourselves. So thank you again, Elena. And this has been another amazing conversation on Shift and Thrive. I'll see you next time. That's a wrap for this week's episode. For show notes and more, visit shiftandthrivepodcast.com. A special thank you to our sponsor, Magnitude Consulting, bringing you the thinking power of a growth consultancy and the getting it done power of a full-service marketing agency to help B2B companies fuel their growth. For more information on Magnitude and to get your complimentary transformation readiness assessment, visit magnitudeconsulting.com/getready. Thank you so much for listening. We'll see you next week.